It's about that time of day again. My name is Joseph. It's Tuesday evening, July 25th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and DAX tonight. Crude is bullish with a strong spike higher in the wake of this afternoon's API report, which tells us to look for one of 5 scenarios playing out in tomorrow's session. The S&P is bullish with a spike in range, telling us to focus on failures to buy below the low of the range tomorrow, with the target rotating back to retest the high. Gold is bearish, but struggling to retest today's low is a big clue. Tells us to avoid chasing this move lower and focus on failures up in the battle zone tomorrow. The euro is bearish with a nested head and shoulders pattern, but the most important clue for tomorrow is a lack of a recent pullback. So we're looking for a trap high to sell down to yesterday's low. The FDAX is bearish, but a double down support level we talked about in last night's newsletter is a little too close for comfort, telling us that buyers have a short-term opportunity to grab the next trap low for a move higher on Wednesday. Boy, oh boy, all eyes and ears are on the FOMC announcement and the crude inventories tomorrow. We got some big news on the schedule. We got some big moves from today, so we're setting up for some big opportunities tomorrow. Before we jump into today's charts, though, and put the plan together, I want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come here to the blog, Sideways Markets, and join me for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter goes live. Follow me on social, lower left-hand corner. Pick whatever your favorite social media channel. I'm always posting important charts, links, and updates throughout the week. And don't forget to grab those charts. Speaking of charts, grab those charts from tonight's video and have them ready on your computer right in tomorrow's session. And please don't forget to grab that free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass in the upper right-hand corner. And don't forget, I know that most websites are all automated robots these days, but if you do hit me up on live support, I'll quickly answer and we'll cover all your questions. If you get any questions on the way, don't forget to hit me up on the live support tool on the right-hand side of the website. Got a big day just around the corner here. Tomorrow is Fed Day. Tomorrow is Inventory Day. Got a bunch of news. Let's jump right in. Tomorrow, of course, being Hump Day, right? Wednesday, July the 26th. Now, we talked about this in last night's newsletter. As we go later into this week, it's going to be really important that we remember early in, early out. Basically, the afternoon session is going to be a little bit difficult to pin down because as we go into the end of the month, we expect to see 2 things: increased volatility and decreased liquidity. That is a cocktail, right? That is very dangerous for a new trader. So be careful in the afternoon sessions, Wednesday, Thursday, and Friday. Remember, this is not just your average end of the month. It's the end of the month of July. We are expecting a lot of camping trips to the beach, right, to be commencing this week as kids get ready to go back to school, right, middle of the month of August. So this is usually kind of the most challenging time of the year because the volume dries up pretty good in the afternoon sessions. So get to it early, right? Get to it early. Don't worry about chasing things late in the day. Get to those trades early in, early out as we go into Wednesday, Thursday, and Friday. So you know the plan for this week. Now let's dig in to tomorrow. The big news tomorrow pretty much starts off tomorrow morning at 10 a.m. Eastern time with our new home sales number. That's the big headline news number for the first part of the morning. That'll get the market moving and shaking here tomorrow morning. And, of course, don't forget, shortly after that, we have the weekly inventory report for crude oil traders. I always tell you guys, one of the great things about trading crude oil is that it doesn't react to a lot of news, right? Unlike a lot of other markets that are always bouncing around, right, courtesy of news. What's great about inventories is it doesn't really respond to a lot of news. But there is one report every week, and you're looking at it tomorrow morning at 10:30 a.m. Eastern time. Now, a couple things about this report tomorrow. First things first, I have support and resistance levels posted for you on the chart tonight, as well as below the video tonight on the blog at Sideways Markets. If you're watching the video right now on YouTube, make sure you come over to Sideways Markets, follow the link in the description, right, and then scroll down. There's a little link there that says click here to read more. Follow that link, and you'll see the full text below tonight's video with all the support and resistance levels below the video. I'm going to use those for tomorrow. So first things first, inventory number tomorrow at 10:30. Check the blog, or you'll see in a moment on chart here, or if you follow my social media channels, I sent those out earlier on this afternoon. We have support and resistance levels we'll be using for only tomorrow's session, so get them off my social media channels, or get them off the blog right below the video, or get them off the chart, right, which I'll post right here shortly as well. Second thing here for tomorrow, early in, early out when it comes to inventories. My cutoff is always 10:15 on Wednesday mornings. Wednesdays are a bit challenging for crude traders because it's a real short window, 7 a.m. till about 10 o'clock, 10:15. My cutoff is 10:15 on Wednesday mornings, and then I always give it at the very least 5 minutes after the news comes out, but usually it's closer to 10, if not 15 minutes after that news comes out on Wednesday morning. The bottom line is the best price action on Wednesdays for inventory day. If you're trading crude, the best price action will come before 10 a.m. Eastern time tomorrow, so get at it early. And then we have the FOMC announcement tomorrow afternoon. The meeting began this morning. We'll hear from the Fed tomorrow at 2 p.m. Eastern time. Now, the big thing you want to be aware of regarding the Fed tomorrow is early in, early out. After 10:45, 11 o'clock tomorrow, you really got to have a good reason to be trading. It's not because the markets won't be moving. They will likely be moving, but it's the type of people who are going to be trading after 11 o'clock tomorrow. Remember, big news like the announcement tomorrow at 2 p.m. Eastern time, there's no big animals, right? No big fish in the sea can afford to be stuck on the wrong side of that market tomorrow, right? So remember, big lot traders, the ones that really move these markets, they're going to be sitting on hands into that lunchtime session. So the only people trading tomorrow are me folks who don't know any better, and I really don't want to be trading alongside ignorant or big risk-taking traders, right, as we go into lunchtime session tomorrow. So get out of there early tomorrow morning. Get an early lunch, right? 11 o'clock. Again, I would think 10:45, 11 o'clock. Right, we'll start seeing that news start to slow things down. Be careful into lunch. And then, as I always remind you, there are so many times to find reliable trading opportunities every month, right? This is not one of them. So please be careful tomorrow. As the news hits at 2 o'clock, the announcement will come out. And then just like when Draghi speaks at the ECB, about 15, 20 minutes later, we'll have the press conference begin. And so it's not just going to be 2 o'clock. It'll be between 2 o'clock and really 4 o'clock Eastern time tomorrow afternoon as we hear the announcement. And then, of course, we get the press conference that follows thereafter. So as you can tell, the key tomorrow is early in, early out, whether you're trading crude or pretty much any other market. 10:15 cutoff on crude, and really around 11 o'clock, right, for the rest of these. Please, please, please do not gamble away your hard-earned money, right? It is very difficult for me to anticipate what these big news events are going to bring for tomorrow. And that reminds me, right, if you try trading after the news tomorrow, please trade smaller size, right? I never recommend trading any economic news just because it's so unreliable, right? So please, 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 please be careful, right, with your hard-earned capital tomorrow around the inventory report and around the FOMC announcement. All right, off my soapbox. Can we dig in? Let's roll those sleeves up. We got crude, S&P, gold, euro, and we'll wrap up with the FDAX tonight. Now, crude is aggressively bullish with a strong spike to finish today's session. Now, tomorrow's inventory day, which means anything is possible. But this tells us, right, this big strong spike tells us to look for one of 5 scenarios. The spike higher, first of all, this bullish spike will likely see a pullback and a new higher high. So we're looking for a spike in channel, a spike in wedge, a spike in range, or a possible flag pattern tomorrow. Now the 5th scenario, right, that was 4, right? The 5th scenario is a possible complete reversal, which normally would be unlikely, but with such big news, both the inventory report and the FOMC announcement tomorrow, who knows, right? It wouldn't surprise me whatsoever. I think the most important thing, though, on this chart, and again, you can see I've got those levels listed for tomorrow. Again, you can find those levels below the video tonight as well, or if you follow me on any of my social media channels, I sent it out to you guys a few hours ago. I think the real obvious thing right now is we've got a double up, a triple up, and a quadruple up, right? So we're 4 legs higher. Now, what does 4 legs higher tell us? 4 legs higher tells us this is usually, and again, we got big news tomorrow, so who knows, right? But usually when we go 4 legs up, that's usually about as far as we're going before we get a pretty steep pullback. At the same time, we can see this real strong break even up through the high of that bull channel. What does that tell us? Overshoot. Right? That overshoot at the high of that channel could easily put us in an overshoot environment to the opposite side as that pendulum swings all the way back in the opposite direction. So we're 4 legs up with a big, massive overshoot of the top of that channel, which could easily cause a deep correction, a deep pullback off the high, and a possible full-blown reversal. Now, I want to talk about one of 5 scenarios, right? One of 5 scenarios we're looking for here tomorrow. Remember, we have a strong spike up. When a strong spike happens, we usually see a pullback and a move back up to a new high. Once we get that new high, then we start looking for a spike in channel. Spike in channel tells me I want to buy the low. I want to buy below the low, right? Nice deep pullback. I want to see, right, buying opportunities off of that low. The second scenario would be a spike up, a pullback, a new high, but now instead of a spike in channel, now we get a spike and wedge, right? That would be your second scenario for tomorrow. A wedge tells me, right, to look at prior swings and look to be a buyer with traps. What else do we have here? The third scenario tomorrow, strong spike up, market pulls back, doesn't make a new higher high, and we create what is called a spike and range. A spike in range tells me, right, to buy below that range low, right, buying low of that range. And the final scenario is we call a flag. Strong spike up, we pull back, we're unable to retest the high, the market pulls back further in what is called a flag, right? And of course, we try to buy the low. So these 4 scenarios, you can see I kind of ran out of space there. I apologize about that. These 4 scenarios are really important here. We don't really know what we're going to get yet, right? We don't know what we're going to get exactly here tomorrow, but we definitely know as a spike in channel, I want to buy the low of that channel and buy the trap low. On a spike in wedge, I want to buy those traps on the way to the vertex of that wedge. On a spike in range, I want to buy below the low of that range. And on a spike and a flag, I want to buy the deep dip right outside of that flag. You almost want to see an overshoot, right, of the bottom of that bear channel. Those are 4 scenarios here that we're watching for tomorrow. But what about a 5th scenario? What would it look like for this market to turn bearish? Well, first of all, we'd want to see the market struggle to retest the high. The objective is always, after a strong move up, the objective is always to pull back and then retest the high. If these buyers can't retest the high, it doesn't necessarily mean it's going to reverse. What it will probably happen is it'll probably turn into a flag. And you'll see buyers come in, right, trying to buy the low of that flag. What you want to see now is you want to see this market fall apart down around those lows. Buyers are going to be drooling over the opportunity on a flag pattern to buy that low. What you want to see is you want to see that stuff start to break down. Once we see that market break down below the low of that channel, right, that's going to be your big clue here. The bottom line is the amount of strength that we saw going higher, it's going to look very strong, very similar to that amount of strength as the market dumps back down again. So the rule of thumb for tomorrow is that we see a real strong spike up, a pull back and a new higher high for a spike in channel, a pull back and a new higher high for a spike and wedge, right? A pull back and a double top for a spike in range, right? Buy the low of that range, or a pullback, unable to retest the high, right? But that creates a flag, right? And again, buyers are buying the low of that flag pattern. How does it turn bearish? It'll either fall apart at the low, right? Kind of collapse off of that low, or it'll run back up to the high and then stall out up here around resistance and collapse from there. The bottom line right now is we have to assume that any pullback here right now is going to be seen as a decent buying opportunity unless, right, that pullback has two things. One, strength. Two, it can hold the pullback. Wrapping things up here tonight on the nightly newsletter. You know, guys, I always appreciate your feedback. Let me know how I can make this newsletter a better place to learn and earn every evening. Send me an email to jj@schooloftrade.com and let me know what I can do to improve this nightly newsletter every night. While you're here, don't forget, if you're watching the video right now on our YouTube channel, it's only a small snippet on the YouTube video. Follow the link in the description of that YouTube video. Come over here to the website at schooloftrade.com. Learn more about our 3 levels of membership. And don't forget, if you want to learn more about our trading strategies here at School of Trade, grab that free trial on the homepage at School of Trade. My name is Joseph. It's been great to work with you guys this week so far. Big Wednesday session, FOMC and inventories for tomorrow. Follow the plan tomorrow, and don't forget, you don't need to do it alone. I'll be with all of our clients tomorrow morning in the trade room at 8 o'clock Eastern Time. I look forward to seeing you there. Be well out there. Be nice to each other, will ya? And be here tomorrow. Adios, amigos. Bye-bye for now.